Welcome to IFRS Meaning. Today, we will talk about the functional currency concept according to IAS 21.
A company's functional currency is the currency of the primary economic environment in which the entity operates. To understand this concept, let's look at the following example. An entity located in Europe manufactures vehicles. The unit price of each good is 400,000 euros. However, the company makes some international sales in dollars. In this case, the entity's functional currency would be the euro. This currency mainly influences the sale prices of the goods and services sold and the prices of the raw material purchased. In other words, the price of the product is affected by the strength of supply and demand from buyers who use the euro as their main currency. If the company were to move its production facility to the United States, and even so most of its customers were in Europe, the functional currency would still be the euro. To determine the functional currency, there is a hierarchy made up of 3 levels. At the first level is the currency that influences the prices of traded goods and services, or the currency that influences the price of raw materials or labor for products sold or purchased. If an entity cannot establish its functional currency at the first level, it should look at the next. At the next level is the currency that influences the acquisition of the company's financing, or the currency in which the amounts collected for the entity's economic activity are normally kept. So, suppose a company, for example, cannot establish its functional currency at the first level. In that case, it must look at the currency in which its financial obligations or accounts receivable are settled. If the company finds, for example, that 90% of its debts with banks or shareholders are in dollars, this could indicate that the dollar is its functional currency. And at the last level are the indicators related to a foreign operation. So, when the foreign operations activities are carried out as an extension of the reporting entity, this constitutes additional evidence that the functional currency of the foreign operation is the same as that of the reporting entity. This means that if an entity is located in Europe and has a subsidiary in Japan, for example, and most inventory purchase and sale operations occur between these two companies, it must be said that the subsidiary's functional currency is the same as that of its parent company. It is always necessary to prioritize the first level. If an entity, after making all possible efforts, finds that the first level does not provide sufficient evidence to establish a company's functional currency, it will be necessary to review levels 2 and 3. It is important to say that an entity can present its financial statements in any currency. If the presentation currency differs from the entity's functional currency, the entity will recognize its income and expense and financial position items to the chosen presentation currency. In other words, reporting currency is the currency used in the presentation of financial statements. In many cases, it may be equal to the functional currency, but in other cases, it may not. The determination of the functional currency will significantly impact the financial statements when there is a significant variation in the exchange rate of the operations carried out. This means that if an entity's functional currency is the euro, and this company acquires a loan in dollars and exists an increase in the exchange rate, this event may considerably impact the profit and loss statement. For example, in January of year 1, an entity located in Switzerland acquired a loan for $100,000. The debt will be paid in full by the end of year 3. In this case, each dollar is equivalent to 0.92 euros, which the entity must recognize a financial obligation of 92,000 euros. In this way, if at the end of year 2, each dollar is no longer equal to 0.92 euros but to 1.4 euros, the company's loan will go from 92,000 euros to 140,000 euros, which means an impact on the profit and loss statement of 48,000. Let's look at the following example to understand the subject of functional currency a little better. A pharmaceutical produces medicines, and the price of medicines is affected by the supply and demand of the country where the entity operates. The entity is in the United States, and transactions are recognized in dollars. However, most of the shares belong to another company in Europe, where the euro is the predominant currency. Based on this example, what is the company's functional currency? In this example, the functional currency of the pharmaceutical company is the dollar. In other words, the dollar is the currency that influences the supply and demand of the products sold by the pharmaceutical company. Although the company is headquartered in Europe, we must prioritize the first level to establish the functional currency. I hope this example has been useful for you. If you want to delve into a specific topic related to international financial reporting standards, in the video description I leave you an email where you can ask technical questions.
Finally, if you want to learn IFRS, be an expert and make a difference, we remind you to review our course on International Financial Reporting Standards. The course has more than 270 explanatory videos, more than 370 analysis questions, personalized advice, and real-world examples and cases. In the video description, you can find all the course information. Cheer up, and take your professional career to the next level.